Mastering Bookkeeping Basics. In this session, I'll present an overview of bookkeeping basics, including the importance of accurate bookkeeping, key accounts, different bookkeeping methods, accounting principles, financial statements and reports, and best practices for effective bookkeeping. Overview of Bookkeeping Basics. Importance of bookkeeping. Bookkeeping is the systematic process of recording a business's financial transactions, including purchases, sales, receipts, and payments. It is crucial for maintaining accurate financial records, which are essential for making informed business decisions and ensuring compliance with tax regulations and reporting requirements. Key bookkeeping accounts. The 5 essential bookkeeping accounts to understand are assets, liabilities, revenue, expenses, and equity. Assets encompass everything the business owns, while liabilities represent the company's debts. Revenue and income accounts track the money earned, and expense accounts monitor the money spent. Equity reflects the owner's investment in the business and owner withdrawals, as well as accumulated profits. Bookkeeping methods. Bookkeeping methods can be single entry or double entry. Single entry bookkeeping is suitable for minimal and straightforward transactions, while double entry bookkeeping is recommended for more complex and comprehensive financial tracking. Double entry bookkeeping ensures that every transaction is recorded based on the accounting equation assets equal liabilities plus owner's equity and debit and credit entries. Accounting methods. The cash basis and accrual basis are the 2 primary methods of accounting. The cash basis records transactions when cash changes hands, while the accrual basis records sales and purchases immediately, regardless of cash movements. Transactions are recorded based on a set of established rules called accounting principles. Financial statements and reports. The balance sheet, income statement, and retained earnings account play crucial roles in providing a comprehensive overview of a business's financial status. The balance sheet reports the company's assets, liabilities, and equity at a specific point in time, while the income statement covers the revenue, costs, and expenses over a defined period. The retained earnings statement tracks the profits that are kept in the business and are not distributed to owners and investors. Best practices for effective bookkeeping. Effective bookkeeping practices include maintaining organized records, tracking revenues and expenses, and staying on top of cash, inventories, accounts receivable, and accounts payable. It is also recommended to use bookkeeping and accounting software to streamline the bookkeeping processes. Conclusion. Understanding bookkeeping basics is essential for small businesses and individuals. Courses and tutorials like my Bean Counter courses provide valuable skills and knowledge for individuals looking to enhance their bookkeeping expertise and contribute to the financial success of their businesses. Well, time is up. Hope you guys learned some basics. See you next discussion.